JSW Steel is a company in focus. Their numbers if there's one line to sum up the numbers, is it that the profit after tax and the margins picture is shining despite what seems to be a top-line miss and largely probably higher volumes offset by lower realizations. Is that the story, and is that the story changing going ahead with all that's happening in China around? Mr. Jayant Acharya, Joint MD and CEO of JSW Steel, joins in right now on the show. Mr. Acharya, thank you so much for joining in. How would you sum up the quarter, sir?
So, Niraj, in spite of prevailing challenges and uncertainties, as you rightly said, I think JSW Steel has delivered strong operational performance. If you look at our volumes, our production volume grew by 14%, in spite of the fact that we had 2 blast furnaces under planned maintenance shutdowns. Our sales volume grew by 9%. And the positive thing on the sales volume is that the domestic component of the sales volume in India grew by 12%, as against an India growth of 7.9%. So from a volume perspective, I think we have done reasonably well. From an EBITDA perspective, I think our EBITDA numbers are reflecting a positive story. Our consolidated EBITDAs are at 7,576 crores. It has gone up. Primarily, we benefited from the sales price improvement in the market. The safeguard duties were very timely and has been supporting the general pricing environment and the steel industry at large. Having said that, I would also say that the prices, while they increased in April, May, have moderated in June and partly in July. So we will see how that goes. In the past quarter, our coking coal costs also went down. So we had a better cost equation. We had a better price environment. And although we had done some shutdown costs, but we still delivered a strong operational performance in India, and our overseas operations also did very well.
So very strong performance on the EBITDA per ton as well, right? Presumably because of these prices. But I did hear you say that they've kind of come off in June and are currently at the lower end. Why did that happen, Mr. Acharya? And what could the factors be that could help alleviate if not alleviate the pain, then take the prices higher just like that?
So I think what is happening is the geopolitical uncertainty challenges which we see, which is compounded again by the tariff policies which have been announced in the last few months. That is having a dampening effect on the sentiments by and large globally, and to some extent in India as well. So you see the prices have softened to some extent internationally, and therefore in domestic market as well, we have seen that. The good thing is that Chinese production side, if you really were to see the last few months, China production has moderated. From a 3 million ton daily rate in March, it has now come down to about 2.75 million. So the production is moderating, and we expect maybe a moderation of 30 million tons in this calendar year in China's production. The domestic demand in China is still soft, and that's why the exports from China are elevated. And that is a challenge, and that is a challenge for the global steel industry at large. The safeguard in India has, I would say, given us the protection necessary to ensure that dumping does not happen. However, since the international prices have gone down and the trade flows are changing, because some of the countries which have now got a higher tariff into America are now looking for different markets, and some of them we find now approaching into India. So we have to be cautious and as we go into the next few quarters.
Wow. It seems, Mr. Acharya, that the situation may be far from kind of over. I mean, if Donald Trump is going to use this as a tool to gain access, bargain, etc., then we probably not reaching steady state business per se in the near term. Could that therefore continue to be an overhang, or at best keep on providing uncertainty at the very least?
The tariff, some of the countries, they are hoping to reach a conclusion soon. Some of the countries, they have extended the timeline. So probably during this quarter, we should see some settlements getting done, and that would provide some relief to the market. Having said that, Neeraj, the good thing is that the global economy is still quite resilient. If you see, World Bank has still forecasted a growth of 2.9%, although marginally down from the previous projections, but still holding quite well. So it should ease out, I think, in the second half of this year, financial year for us in India. India continues to remain stable. The projections are at 6.5%. I think that will continue to hold up the Indian steel demand as well. The capex from the government side has been positive in the first 2 months, and we expect that speed and the momentum to continue. So in general, good. I think private consumption will be aided, by lower interest rates, by lower inflation. You see the rural economy doing better. I think you will see an urban improvement now with more money in the hands with income tax cuts and lower interest rates. So by and large on India side, we are positive, and I think we should have a good year. While the growth in this year, we would expect to be in the range of 8 to 9% for India at large. I think it will still be quite good in the range of maybe 12 million to 14 million tons for the year as a whole, incremental growth.
Okay, just one quick follow-up, Mr. Acharya, and that's on either the EBITDA per ton or EBITDA margins. I heard you say that you had experienced lower coking coal costs, but I didn't quite get a handle on whether they still remain low, and do they help you stay at the margins that you've clocked in quarter 1?
So the coking coal prices in the quarter 1 went down by $14 and we expect that moving forward to go down maybe up to $5 because coking coal prices have now reached some level of stability.
Okay.
Maybe another $5 of dip we could see. Iron ore prices, maybe we'll see some decline in this. It's already happened in this 1 or 2 in the past month. So that should play out in the next 1 or 2 months into our production cost. But having said that, I would also like to say that the international price of iron ore has again moved up a bit. So we'll need to see how that goes. But on the efficiencies and our cost at JSW Steel, we had one-offs in the last quarter. One was our shutdowns of 2 blast furnaces, which had a shutdown cost. It also had ramp-up costs, so the operational efficiencies were impacted. We also had another one-off, which was on account of the euro appreciation. So we had a 343 crores impact on our euro appreciation on the loan we have in euros. So that's a one-off because from March end to June end, the euro appreciated quite a bit because of the volatility which we see in the market. I think that's a mark to market. It can adjust going forward if that changes.
Okay. Sorry. So would you be able to maintain the EBITDA per ton or EBITDA margins, you reckon?
I would say, I would not like to comment on whether we can maintain the margins, but I would like to say that the drop, let's say the prices have become a little softer, but our costs and efficiencies, including the shutdown costs, which will go away, will support the drop in realizations.
Okay.
So therefore, we will be in a better position, but whether exactly the margins will remain the same, difficult to hazard a guess on that. But our overseas operations also, I just would like to say that did quite well. US operation from a negative 3 million in the previous quarter went to a positive 20 million. Our Italy operations from a slight negative went to a positive 1.3 million euros. So overseas has done well. Our domestic subsidiaries have done well. Our JVML operations have picked up very well and continuing to do well. So by and large, from a volume perspective and from a cost-based perspective, I think we are well placed.
And now that I believe the BPSL situation also, the verdict I believe came in end of May, etc. And if I'm not wrong, there is a sales volume of 0.78 MT, right? And a sequentially higher EBITDA at Bhushan Power too. I'm just trying to understand, would you reckon that your expansion plans stay on track for what you had thought of at the end of Q4 or FY25 for FY26?
Yes, so our expansion plans remain on track towards our 50 million ton goal by 2030-31. As far as our expansion plans are concerned, they are mostly on brownfield. Currently, if you look at India, we have a 34.2 million capacity, including Ohio, it's 35.7 million. We are adding our phase 3 in Dolvi expansion by 5 million tons, and we would be adding another expansion in Vijayanagar post that. And we also would like to add a, let's say, low carbon emission steel from our Salav facility in the west of India. So with all these three brownfield expansions at low specific investment costs, we will still be able to bring to the table. That is one. Second is on the BPSL side, you're right. On the BPSL side, the sales numbers have improved, the production numbers have improved. We have expanded capacities, so the turnaround of BPSL is very evident. The EBITDAs last quarter were at 760 crores, higher quarter on quarter, higher YOY. The matter still rests with the Supreme Court. We have filed our review petition. We believe we have strong grounds to pursue the review petition. The COC and the RP have also filed their separate review petitions, and we are waiting for a listing date to pursue the petition.